biggest oil companies have seen production fall in 2013, despite spending a combined total of over $120 billion. Hi there, you're watching Dukascopy TV. I'm Ben Jones and this is the press review. Shell, Exxon and Chevron have been investing vast amounts over the past few years to try and boost their oil and gas output. Combined capital expenses have hit $500 billion in the past 5 years, but production for both oil and gas are down. In the last year alone, the three energy giants spent the equivalent in today's dollars of putting a man on the moon. All three organisations are predicted to report a fall in profits from 2012, and after missing out on the shale boom, they have had to dig deeper in their pockets to try and find the next big source of energy. Shell have spent just over $44 billion in 2013, up almost 50% from the year before, and Chevron, whose revenue is half the size of Exxon or Shell, spent $42 billion on their projects, over 2 times the amount they spent in 2010. The reason for all of this spending is the easiest to reach oil has all been snapped up, so companies are having to invest in mega projects to try and keep up with the ever-growing demand. A co-president of an investment bank has said, "If you don't spend, you're going to shrink." But unfortunately for the oil companies, he added, "I don't think there's any way these projects are more profitable than their legacy production." One of the biggest projects that all three organisations are involved in is the Gorgon project based in Australia. The plan is to supply the major populations in Asia with natural gas for decades after discovering a trove that is potentially 40 trillion cubic feet. However, costs are already up by 45%, hitting $54 billion. Chevron run the Gorgon project and own 50%. Their vice chairman stated at the start of the project, "We see a window of opportunity to move forward with Gorgon, timing it to capture growing market demand while benefiting from a lowering cost environment." Although all three companies are still predicted to see billions of dollars worth of profit in 2013, each will see a slide from the year before. It seems that the amount they're spending is not giving them the returns they initially would have liked. That is all for today's press review. Darren McDermott will be back with another edition tomorrow, so make sure you click back. Goodbye.